Hi, welcome to the Market Alert for Wednesday, 30th of January 2019. So yesterday the pound lower, lots going on in Parliament with regards to votes for amendments to the Brexit deal and all sorts of other weird and wonderful things going on. So the pound lower, finding support at the 200 bar moving average there. And if prices are to move higher off this area, then you want to see them actually close above the 131.78 level there. Otherwise, we'll be going back below the 200 bar moving average. So a crucial point in the daily chart for this market at the moment. Yesterday, well, didn't do a lot. As I say, it was waiting for the debates and then votes in the House of Commons yesterday, and then you can see the reaction to what happened. I'm not going into any detail, not really interested. As I said before, Europe's a basket case financially anyway, 22 trillion. They've stopped printing. Let's see how soon they have to start printing again and buying up bad debt across Europe to keep things afloat there. News today, yes, we've got the FOMC statements today and press conference. A very good article in Zero Hedge today called "The Fed Will Massively Disappoint Markets Tomorrow. Here's Why." This is to do with quantitative tightening, and basically Powell has gone from being hawkish to dovish, which is why we've seen the Dow moving back to the upside. According to the article, for me it's a case of let's keep this market on the highs, keep the sheep under the illusion that everything is fine, and we just keep printing the debt accruing globally. And I mean, it's just smoke and mirrors, frankly. And you can see the market's struggling to get above the 200 bar moving average. But basically what the article's saying, that is, if he doesn't mention the balance sheet, because it's reaching a point now where they're saying, well, we keep offloading 36 billion a month, but each day that they do it, it's sparking a bit of a sell-off in the market. So now they're going to say we're not actually going to get all of it off the balance sheet. We're going to keep and retain some of it. And if that's the case, I don't know how the market's going to react. It could be seen negatively or positively, depending on how they want to play this. But one thing I know for sure, they want to keep these markets on the highs. That's for sure. There's no doubts about that. It gives the perception to those holding stocks that everything is being growth in the economy, everything's fine, when simply it is not the case at all. Yesterday in the Dow, the market moving higher. We think we're already above the 200 bar moving average in the 830 there. You can see the market getting above the 200 bar. You've got your normal retracements there. And then just before the open, you see prices moving higher on the open, coming down to the 50 bar moving average. Get to a double top across here, then the market down, back to the DP level. The market comes back up again through 76% and then goes back through, and then moves down to the 200 bar by the end of the trading session there, where the market has currently found support. Nice bit of volume there as well. Then you just retracement, and then the market just trading in a range there as prices continue to be range bound there, 50-point range at the moment. And finally in Bitcoin yesterday, the market just coming down to the 33.90, finding support there that we looked at in the 76% retracement and hanging in there. Okay, so today the pound, depending on any more Brexit news, I noticed that this proposed amendment to the backstop, Europe have already said no, according to Sky News this morning. So that is another nail in the coffin for May's so-called deal. And the Dow, wait till 7 p.m. this afternoon or later this evening to see what happens there. You'll get some volatility beforehand as they try to second guess whether Powell's going to mention stopping to offload the debt on the balance sheet or not. We'll just have to wait and see. And Bitcoin is at no man's land at the moment. Okay, that will do it for this one. If there is anything to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next.